Welcome everyone to my new video where we're going to talk about liquidity. Liquidity is a very important thing when it comes to trading, and when you understand it very well, you can use it into your own strategy and into your own career. Please subscribe to this video, like this video, and hit the comment section, and please let me know if you have any topic that you want me to make a video about. I'm happy to do so. All right, the few liquidity points that we're going to discuss are support and resistance, trend lines, and market structure. Definitely stay till the end of the video because we're going to search for those liquidity areas on the live chart, and I think that will give you an even better understanding of what the market really does. All right, let's jump into the first one. So support and resistance, it's a well-known strategy. Lots of people trade it and it's fine. You can be profitable with it for sure, but it's only not my type of thing. And I think too many times you will be just stopped out. So you need to have heavy risk management applied. You have to be very mechanical within your trading, which is a good thing. I'm not gonna lie. And like I said, every strategy can be profitable. I'm not here to bash anything, but I want to make things more clear for you guys so you have a better understanding of what support and resistance really is and what liquidity is. Because liquidity is nothing more than other participants in the market, meaning retail traders, but also institutions. Institutions also fight each other on the chart, right? You have institutions that trade SMC, you have institutions that trade support and resistance, you have institutions that just don't use any strategy. They make the market, right? You have the market makers. So you have loads of people and lots of other participants in the market. And liquidity is nothing more than the hunt of stop losses in the market. And it could be retail, it could be institutional, we never know. But the fact that it's there, it's definite, right? We can clearly see it on the chart, it's there. So when it comes to support and resistance, for this example, you can see that we have a resistance buildup up here and we have a support buildup. Let me mark that into a blue zone so we all know what we're talking about. So support and resistance traders mainly trade within these ranges, and they go long from this area, go short from this area, etc., etc., right? This is how the majority of support and resistance traders enter on into the market. But there is more to only see it like this, because support and resistance traders are very often also breakout traders, right? So when they see that the support isn't holding anymore, they're going to enter on shorts just on the break. So when we see a sweep of a support, what very often happens is that those traders entering on shorts as well. And then we have another participant in the market, which is called break and retest traders, right? So they wait for the break, they wait for price to retest this level, they enter on their positions over here, anticipating that price will melt down, right? The other way around is, of course, when price is coming into this area, right? Into the resistance. So when price breaks that resistance, so-called breakout traders just entering long. They have a buy stop over here, anticipating that price, if it breaks out, will completely rocket off. Then we have the break and retest traders. They wait for price to come back to that level and then wait for price to rocket off again. So it's very important to understand who's in play and what kind of traders are in the markets and how can you take advantage of those traders, right? So what I usually do is when I see something like this happening, for example, this is the Asian range, which is a very important play in my strategy, I wait for all those traders to be entered, right? So the support traders will get wrecked over here. Breakout traders will enter here, right, for shorts. Break and retest traders will also enter on shorts. So when we sweep the support, there are new traders coming into the market. And what we usually see is that price takes them out. Sometimes it gives them a reaction, and that's for the impatient traders that just enter market just straight away. They see it melts, they want to be part of the move that's happening. Let's call it FOMO. And what we very often see is that price just rocket off into the opposite direction. And now we have something that's called a major inducement happened here. So it's very fun to see, and we will go to some live examples on the chart later. But the fun thing is that this stuff is happening time and time again, and these certain events like this are mainly happening on two major timings on the day, which is or the London session or the New York session. So this is why I always tell that those sessions are very important. That's the times you want to trade, because volume kicks in, right? The institutions, the hedge funds, the banks, they enter when the market opens, sometimes a little bit pre, they enter a little bit pre, they create those traps, right? The market makers create traps like this, waiting for the market to open to take everyone out and move in the opposite direction or its initial direction. So this is what we can find on support and resistance traders. So now let's move into trendline traders. Trendline traders are traders that anticipating on the market to push up like this. So for example, we have a trend line from down here all the way to up there. I'll make it a little bit more clean like this. So trendline traders, you can see a trend line maybe a little bit the same as a support, right? It's support holding the bullish market structure. And what we very often see is that the first touch and the second touch are the build-up to the trend line. So we have the first touch, second touch, and the third touch is where most people enter longs. But what do we see quite often is that price just wicks through the trend line, sometimes doing a break and retest on that same trend line, giving a bearish reaction, a bearish break of structure to give them the illusion that there is a lost POI where they might be entering as well, expecting price to move down even more. But what very often happens is that price then keeps on moving towards the upside, right? And this is what we see with trend line so often. The third touch of the trend line, it's very occasionally where I see that the third touch of a trend line holds. And if it holds, for me, it's fine. Then the fourth touch, I wait for that sweep and I'm entering maybe on that as well. Because for me, what's very important is to combine all those things that I'm going to teach you right now and make all the confirmations out all those sweeps of liquidity, because they will be lining up together, which makes it even more perfect to enter. So this is how you should approach trendline liquidity. And for sure, the same goes for the bearish market structure, right? We have bearish market structure stepping down. We have the third touch. Let's draw that trend line in to give you guys the understanding. So we have trend line. What very often happens is breakout traders wait for price to break out of the trend line. But then the people that entered on shorts, right? So people here enter on shorts. They expect price to move down again. But what often happens is that it sweeps, and now breakout traders think the market will go up again. And then we have break and retest traders. They wait for price to tap into that trend line again and then enter on longs. So imagine how many participants already traded before I'm waiting to get in a trade anyway. So there are already 1, 2, 3 traders getting stopped out, or their stop loss is getting hit before I enter the market. And I don't want to be part of their liquidity, right? We're a little bit smarter, we're more professional, we're more experienced, we know these things happen. So it's better off waiting for those big sweeps to happen and then enter on the opposite direction. So interesting stuff, right? Interesting stuff. Then, besides trendline liquidity, we also have market structure. So we have market structure stepping up bullish, making higher highs, higher lows, higher highs. And what we very often see is that we see that a low gets taken out over here and then price moves in its initial direction, right? So we have people anticipating that price will rocket it off from this order block. Like the same happened over here, right? Let's assume here's an order block. Price came in, gives a 1 minute bullish break of structure. People enter, targeting the next high. And this stuff happens time and time again. And for sure, sometimes it will work, but it's not the best thing to enter. Because let's have a closer look. When we see bullish market structure stepping up and we see kind of bullish order flow, most of the time it's the market makers that make the market look like this, so for you it's appealing to enter. And what we very often see around certain timings, again, London session, New York session, is that they create this structure pre London or pre New York. And what everybody thinks, all right, we're coming into New York, volume kicks in. Now I'm going to enter on this trade. They enter straight on here. For example, they put the stop loss down below. They target the next high, right? This could be a New York trade. And what the market mainly does is that it gives that bullish reaction, break of structure. So more people enter in as well. And then price sweeps that low and then rockets off again. This happens so often, and you need to be very careful with this stuff. You need to be very aware of what price is telling you, what narrative price is telling you. So if we combine all those things, and let me make a new example. So for example, we're combining this, we have market structure stepping up like this, right? And everything looks pretty good. And now price sweeps and moves. This is what we see from market structure. Market structure is not always highs, lows, highs, lows. It's ping-ponging all the way around. So what do we see, for example, is that we have a resistance zone turning into a support zone. Interesting. Then we have our last POI or order block in the last bullish range. And we have trendline liquidity build up. Right, so we have a first touch, second touch, and third touch. So imagine how many people entering here, and imagine how many traders will be taken out before the real move is happening. And this is understanding liquidity to such a degree, right? Because I'm going to be a little bit smaller. What very often happens, and what could be an entry confirmation for me, is when price comes in, gives a bullish reaction, inducing buyers into the market, because everyone think the support will hold, the order block will hold, the trend line will hold. So they're all loads of traders are already into a buy. Then price breaks down and takes all those traders out. Now everyone thinks that price is going to melt, right? The breakout traders, break and retest traders, they enter on short. So their first trade was a loss, and the second trade in the majority is also a loss, because mainly we see a 1 minute bearish break of structure when it comes into that area, and then it started to rocket off. So important stuff and very exciting stuff to learn, because if we have bullish market structure and we break bearish market structure, so all the people were buying from here, but what do you think will happen with market structure traders when they're stopped out of their trade? Well, they expect price to come again into the last order block, waiting for price to come in, give a 1 minute bearish break of structure. Let's assume this is the 15-minute range we're talking about, and price is going to melt. But very often it gives this reaction as a pool of liquidity to just move up again. And this stuff, you definitely watch this video a couple times again, and if you have questions, drop them in the comment section. I'm happy to go over all of them. But this clearly shows how manipulative these markets are. And if you understand liquidity to a deeper level, not just think, it's liquidity. No, you need to think that which trader is entering right now and which trader is getting stopped right now. And if you can really understand that to a deeper level, then finding entries will become easier, right? So now we had a few examples. We had the support and resistance traders, we have the trendline traders, We have the market structure traders, and we have the example where all those liquidity areas come to one, right? So let's find some examples on the live chart. Let's start on the hourly. Let's see if we can find some interesting stuff happening already. Let me see. Let me see. All right, already an interesting stuff. Let's take this price action, for example. What can I see? I can see that there is a trend line building here. Third touch of a trend line pushes through. Can you see how price is slowing down when we come into that trend line? This is inducing sellers. Price is slowing down, waiting for it to hit. It might give even a 1 minute bearish reaction from that trend line and it just rockets off. The same goes that price action is stepping up bullish, right? We have bullish market structure. And what happens here? We have a order block over here. And look how price comes in, wicks in, give a little bit of a bullish reaction. It even leaves a little bit of a resistance area over here as well. Little resistance area, and it breaks through it. So everyone that was buying from this area is getting completely wrecked. And then price breaks again. It comes down, comes up, comes down, and it breaks bullish again, right? So we have again a bullish break of structure. What every market structure trader is looking at is a buy from this area. Well, of course, it's not going to hold and it's completely wrecking those traders out. So the same goes with here. We have a resistance area build up. We even have a bearish break of structure. And look at the details, guys, because we have a bearish break of structure. So we can say that the 15-minute internal structure is bearish. What do we have over here? How interesting. We have a POI or an order block where price comes in, induces every time. All those wicks are inducing, for example, smart money traders to go short. It even gives that bearish reaction short and then takes them all out. So resistance traders out, market structure traders are out. It's insane. So now we have a bullish break of structure over here. So our range is from this low till this high, meaning we have market structure traders entering on longs. What else do we have? Hey, we have a trend line build up on the same occasion, right? Now, trend line is taken out, this low is taken out. We can see it wick through. Again, all traders are stopped at this point. So let's dive a bit more into current price action. This is from last week before even. We can again identify our trend lines. We do have a trend line over here, and you can see how this trend line is just swept. I think this was news, 8 p.m. Dutch time. Could be Powell speaking. That guy is making some crazy market movements for sure. Let's find some detailed work. How can we find entries? Well, example, and I've discussed it in one of my shorts as well, but we have a very clean example on price over here. So we clearly can see that we have a low in the market, we have a high in the market, we have a higher low in the market, and we have a high in the market, right? Market structure, pretty obvious here. What else do we have? Well, we have a resistance area that's turning into a support area. So we have support traders going long here. This is not even the area where they go long. They go long here because the support is getting confirmed here. It pushes up. It even breaks bullish market structure. So imagine how many traders think, oh shit, I need to capitalize on this move. I need to enter on this trade because this is going to be the trade of the day. They expect price to move from this area and make a new high. Well, of course, it's not happening because look at the time. This is half an hour into New York Open and price just sweeps all those traders out. And let me check on the 1 minute if we can find any examples. Oh, sorry. So price comes in, gives a reaction, price comes in again, gives a reaction. I think this is a news event though, not gonna lie. It looks like it for, 2:30 news event probably. But anyway, it doesn't matter too much. Price wicks through it, breaks bullish again, and continues in the opposite direction. But what happened when price swept this support area? Well, we have short traders or breakout traders entering shorts because they expect price will just melt from here. But nah, it ain't. It just keeps on rocketing off, makes a new high, and then again, I think this is 8. Yeah, I think this is Powell speaking again. Doesn't matter too much. This is high impacting news, but the trade is already done. We could target a high. Personally, would be a little bit more conservative with targeting highs. I would at least target areas like this, for example, or on the 15-minute, even cleaner areas like this. Because this is, again, a little order block that left a big imbalance. So this is where a lot of market structure traders will enter on shorts, expecting it to melt. So quite a few examples here, right? Then we have another example. This was a trade I took on Friday, played out pretty nice, to be honest. But you can see how clean this stuff is. It works time and time again. There is literally every day there are setups. So again, let's dive in. We have a resistance area turned into support area. Support is confirmed over here. We break bullish market structure. And I think there's even a 1-hour POI where price traded in, right? To give even more confirmation. Yeah, look at this. So we have price stepping into this order block, right? What happened then? Price broke bearish, took out support area. I wouldn't say it took out any trend line. We could draw a trend line from this low to this one, and yep, it took it out as well. So you can see this stuff, it's everywhere. And this is all you need for the confirmations to go in the opposite direction, honestly, right? We have equal lows printed over here. You could just simply enter, and I did enter here. I had my stop loss on a 20 pip stop loss. I just want to be safe because I knew there was news coming, and I was targeting for a 122, which played out. I did manage my trade a little bit different. I took out 50% of my trade over here because it was a little bit risky with news coming out. So we took out this high, 50% of the rest was running to take profit, which got hit anyway. But you can see that trendline traders taken out, support traders taken out, market structure traders taken out, because market structure traders would enter from this area. So now we have all those other traders, all those other participants in the market taken out, and now we are finally there to make the major move towards our initial goal. So I hope this video made some sense. I hope this video really helped. Please, again, subscribe to my channel. It would help me tremendously. And I hope you liked the video. Drop a comment with any feedback. Happy to improve myself. But especially thanks for watching, and on to the next one. Cheers.